Hello, everybody. This is True Demon, the Devil's Stockbroker, and I'm looking at a very, very, very unusual ticker right now that's got my attention just in the last few trading days. What we're looking at here is MULN, Mullen Automotive Inc. They do something with EV cars, and that's about all I know. The only other thing that I know is that their volume is so strange. This volume spike that has just occurred has been ramping up ever since like early October 2021. Their stock at that time was trading at an open of $7.14, and over the course of the next several trading weeks, reached a recent high of $14.95 and another high in mid November of $15.89. From that point, it sold off and it continued selling off, with the OBV moving perfectly flat, which you would kind of expect it. I'm not sure if there was bad news. I don't know if there was anything in particular that happened with the company that was negative, but they sold off and they've kept selling off and kept selling off and kept selling off. And all of a sudden, the volume started to ramp up and they're still selling off. And I'm looking at this like, what the heck is going on? This stock is currently now trading at an average price of around 60 to 65 cents. And I'm looking at this volume like, what is happening? So I decided to go and run our analytics tool against this just to find out for myself, where is this volume coming from? And what is this? What is the source of all of this? Looking at Ortex, I was checking to see if this was a heavily shorted stock, and it was for a little while. The short interest was roughly at 1.27 million. If we go and compare that to the free float, a little bit of anomaly there, but the SI of free float was anywhere between 5 and 9% of the float. But ever since December, after the stock had continued selling off for a while, the shorts began to cover. Okay, so there's not a lot of short interest in this stock, which is strange. I would have thought that this would have been getting more and more shorted as time went on, but that's not the case. The stock keeps selling off right now, and for whatever reason, the the price keeps going down and down and down and down and down, and the utilization is also going down, 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 down. It was at a high of 96% on February 8th, but now it's like below 36%. There's plenty of shorts available, and it definitely looks like shorts were covering their positions. And I don't have anything against the shorts in this case. It looks like, for the most part, like the actual shorting was perfectly legitimate. There's some failures to deliver, quite a few actually, going on early on this year. Ortex only started tracking this particular stock ever since early November, and the failures to deliver reached their highest point at 412,000, which, if I were to go back and I were to go and look at the float for this stock, so I'll pull that up really quickly, roughly 17 million shares on their free float. So about 2.5% of their free float had failed to deliver on this particular day. The stock didn't end up on the threshold list. The failures to deliver were addressed rather quickly, but it was a massive amount of failures to deliver, presumably because their stock ran by about 20% and options had expired in the money, so it must have been a huge loss for whoever was selling calls. So even though I'm looking at Ortex for some answers here, I'm not finding any. So I decided to go and look at the short exempts. And oh my God, the short exempts have been absolutely excessive to the point where it really bugs my eyes out. I'm going to zoom out here just to show something. Going on from early October, the short exempts were 0, okay? And this is normal. It's not a common thing for short exempts to be elevated on any stock. Short exempts, for those who are new to the channel or haven't heard me explain it before, short exempts are a tool of market makers to use a short that is exempt from the locate and the SSR rules, or the uptick rule. and it's reserved only for market makers during, quote, bona fide market making activity. The purpose of a short exempt is when a market maker is taking the other side of a buy order, if they're unable to locate a share within a timely manner, or if they have to short during during a downtick, they use a short exempt to do so. And that exempts them from those rules so that they can fulfill the buy order, because that's the role of the market maker. This is by its very nature an exceptional occurrence, but that didn't happen here. And you see that you can look at the rising prices. This was October 25th. It closed at 742, and it continued rising consistently by roughly 4%, 3 to 4% every single day up until it reached a high of $13, or it closed at $13.09 on November 4th. Not a single short exempt occurred during this entire time. If there were going to be short exempts, you would have expected it to be during highly volatile price movement, because there were too many orders to be fulfilled in a timely manner. But that isn't what happened. It wasn't until the day afterwards that short exempts went through the roof, and they're excessive. Over here, where my magnifying glass is hovering, this is the total volume. The next column is the short volume, and this is the short exempt volume. The total volume for the day was 1.7 million, and the short volume was 638,000. That's more than 60. That is 60%. 60% of the total volume was short volume, but the short exempts were 114.8 thousand. That is 17.9%, almost 18% of the short volume was short exempt. And out of the total volume, the short exempts were 10.9% of the total volume. That's what you see in this column here. That's absolutely excessive. We've only seen that huge amount of short exempts during squeezes such as GameStop and AMC before, but even they didn't reach a short exempt ratio this high. This is so unusual that I've never seen it before, and this is something that I look for in all the stocks that I pick, especially ones that I think are being manipulated. So let's continue to look on. Ever since November 5th, the short exempts have consistently stayed at or around 3% of all the short volume. So that's a short exempt ratio of 3%, roughly. Additionally, the short volume on this stock was at 50% or more on average every single day from then until now. And recently, very recently, the short exempts got absolutely bananas. The volume in this stock has consistently risen higher every single day for the last 2 trading weeks. But ever since the 4th of February, the short exempt ratio has been at least 15%. Most of these numbers you're seeing here are greater than 20%. The highest ever was on February 8th, where the short exempt ratio reached 35.5%. I've never seen these numbers before. Just a reminder, the short exempts are only allowed to be used by market makers. No other entity is permitted to use these. No other entity has access to them. I don't know what's going on with this stock, and I am absolutely not telling you at all what to do with it, but this is so strange. I've never seen this activity before, and every time that I have seen activity that even resembled this much short exempts, I've seen the stock move huge amounts within 30 to 45 trading days. But I've never, ever, ever seen these numbers before. This is the highest I've ever seen, and I don't know what to make of it. The only thing that I can tell you is that market makers are doing something with short exempts. They are using so many of them. Here is the thing that I want to point out that is going to be important for retail to keep in mind, especially if you don't know the rules about short exempts. When a market maker takes a short exempt and they use it to exempt themselves from the locate rule, meaning that they do not have to locate a share to borrow before they take the short, what they are doing is they are taking a naked short. It is permitted and it is legal, supposedly, but it's it still puts them in a uncomfortable position. And what I mean by that is that after 2 trading days, when the trade settles from the short exempt, if the market maker has not purchased the share back out of the market and delivered it to the person who bought it on the other side of the trade that they fulfilled, then that stock becomes a failure to deliver. If a market maker has an excessive number of failures to deliver for more than 6 trading days, they can be restricted from trading the stock and forced to liquidate the positions. Additionally, if the stock ends up on the threshold security list, meaning that the failures to deliver exceed 0.5% of the tradable outstanding shares for more than 5 trading days, then the stock gets placed on the threshold security list. And if the stock stays on the threshold security list for 13 consecutive trading days, then anyone who is consistently failing to deliver the stock can be forced to liquidate their positions and close the trades and forced to buy shares out of the market to deliver. MULN is not currently on the threshold security list, but I have a feeling that it's probably going to end up there very soon. Whatever is going on with this stock is extremely bizarre, and if these short exempts are failing to deliver, then there's a huge number of them. Remember when I mentioned the float of MULN? It's 17 million shares. This past trading Friday, the short exempt volume was 1.8 million short exempts. And if all of those failed to deliver, it would be more than 15% of their float. I don't even know what to do with this data, but I think that something is about to happen to MULN stock. I have never seen numbers like this, and I'm trying to be as unbiased in my opinion as I possibly can be, but I don't know what this means. I've never seen numbers like this, and I just don't know what to do with it. At first glance, the stock looks like it's performing absolutely terribly, and that it's just going further and further down every single day. But as I look at it and I see the volume continuously ramping up, I have such this feeling in the pit of my stomach that something explosive is about to happen to this stock. I went and looked at the options on Unusual Whales, and this is also pulled from the Unusual Whales Discord bot that we have in Hell's Trading Floor. This is the historical options volume for MULN. So each day you're seeing the total volume for options on this particular stock. The stock is basically already, all puts are in the money. So any puts that are traded are in the money at this point because the stock is trading so low. The downside risk to MULN is very limited, with it trading at less than 70 cents. The nearest strike is at $2.50 for basically all options expiration dates. As you can see, the call volume has been pretty much the exclusive volume for this particular stock ever since. The open interest for MULN is much higher, is pretty much exclusively on the $2.50 strikes for all expirations, getting very, very close to 10,000 in total. Looking at the most popular strikes, the most popular strike is March 18th with 2.3 thousand OI, a little closer to 2.4 thousand. Options open, closely followed by April 14th with 2.2 thousand. The Julys are also pretty heavily leveraged as well. So $2.50 strike is pretty much the whole bet. And looking a little bit further on the short exempts, I just kind of want to point out exactly what this looks like on a graph. You can see that throughout November, the black line is short volume, the red is short exempt volume, and then the blue line is the total volume overall. Hopefully you'll be able to see the markers on the table, but you can see that the FINRA total volume has been slowly ramping up and it basically went exponential very recently. And the same can be said of the short volume and the short exempt volume, with short exempt volume now exceeding over 1.25 million, which is just mind-boggling to me. And just to illustrate how excessive these short exempts are, if you divide the short exempts by the float and multiply that number by 100, you get the percentage of the short exempts against the free float. And yesterday alone, that number is 10.82%. If you add up all of the short exempt volume for the entire trading week and divide that by the free float, you get this. If you sum up all of the short exempts for the last 2 trading weeks, divide by the float of 17 million, roughly, multiply that number by 100, you get the percentage 36.47% of the total free float. Actually, that's not even just the free float, that's the total outstanding shares. 36.5% of this stock traded on the market was short exempt in just the last 2 weeks. What the hell is going on? If we add up all the calls that are currently open for the $2.50 strike all the way up through till October, we see that there are 7,307 open contracts, which is equivalent to 730,000 shares. Or roughly 4.3% of the outstanding shares in total. As I said, I don't really have any clue, any inkling whatsoever as to what's going on with this stock. All of the chart patterns tell me that it's not doing well, that the stock is sick, and that there is something wrong with the company, and I should stay the hell away from it. But that volume, I can't stop looking at this volume. That candle just begs me to look at this thing. And the more I look at it, the more I look at the short exempts, the more I see an opportunity. What I am seeing in MULN Automotive is that market makers are extremely over-leveraged and are in a position that opens them up to a tremendous amount of risk. Just a reminder that 36.5% of short exempts is something that's, or short exempts being 36.5% of the entire stock's outstanding shares is something that I have never seen in the market. And after scanning tickers for months and months and months, looking at this type of data, and I've never seen this much movement, and it's extremely unexplainable. In addition, it's worth noting that almost all of the call volume has been traded just in the past few weeks. These are just the numbers for the 2.5 strike calls for April 14th. The historical volume and open interest. The volume are the red candles, which you can see have been popping through the roof for a significant amount of time, and the OI has continuously climbed every single day since the 4th of February. Additionally, there have been some insider trades on executives, and there's a lot of acquisitions here. A little over 1.3 million shares. There was a small disposition, but nothing significant. Given that there was an acquisition that's worth, well, little less than 18% of the total tradable outstanding shares, that seems worth noting. And special thanks to Scrap Queen for providing this DD. Over here we have the current institutions that are holding shares in MULN. We have Cetera Advisors, BlackRock, Vanguard, Azusa, and Susquehanna with the most significant holdings, making up roughly 3% of the total shares that are being held. In the trade log, we can see that exclusively. Insiders have been purchasing ever since they were allowed to, I presume, on this date of January 18th. Just a week before that, there was purchases from Asusa and Drohan Tiffany. Not exactly sure if this is just a private investor or a representative of a firm. We'll have to look into that later. Additionally, and I want to go ahead and credit J-Ruff from the Discord for bringing this to my attention, there was a specific point in the article which mentioned the origin of MULN Technologies. In 2012, Mickery bought MULN Motors, a small traditional sports car company in Los Angeles, which he renamed MULN Technologies. 9 years later, he favors a merger that could pave the way for investor liquidity. The MULN merger candidate, a wasted virtual payments company called Net Element Inc. It's managed through Oleg Führer of North Miami Beach, Florida, a colorful Ukrainian-born businessman raised in Brooklyn, New York. Visual on the Russian social scene of the Caribbean island of Grenada, and ranked through the South Florida Business Journal as one of 150, quote, leaders of power, unquote, in Miami in 2017. I have here from Fintel a recent 8K filing from MULN, which mentions the approved issuance of an aggregate of 1.9 million shares of common stock to certain employees of the company. This was an internal dilution and distribution to executive members of the board, including David Mickery, who I believe is the owner, Gary Sadler, Jerry Albin, and Kalen Papa. In total, it was worth about 1.65 million shares of internal distribution, signed by the chief executive, David Mickery. The more we dig into MULN Automotive, the more encouraging the figures get, and the more bullish the outlook looks for the company. This is a recent press release that was sent to me by Verde from the Discord, which cites Dow Jones Global Press Release. Company is on track to meet 2022 operational goals and milestones. MULN anticipates delivery of the first EV cargo van fleet vehicles in Q2 of 22. The company is unaware of any business reason for the current decline of the MULN stock price. Immediately after they mentioned this, their stock jumped. I just happened to notice that when I was looking at my trading view. February 17th, as soon as they talked about this, that's when their stock made a move. It's a really small move, it's hard to tell, but if we go down to the 15-minute chart, we can actually see they would have discussed this on the 16th before the news release. This was the time when they were at the worst point in their sell-off, and then all of a sudden they issued a press release saying, we don't know why we're selling off, and then all of a sudden the stock jumped. Presumably, this could just be investors catching wind of this stock for the first time and entering into a position thinking, maybe this new EV play could be worth something. But in any case, people are starting to pay attention to it. Digging a little bit further into the social sentiment, we can see that it's overwhelmingly positive, especially very recently with volume coming into the stock. So something is going on, in particular with MULN, that I think is worth retail's attention. And I think that we found it. What I have here is a short clip from a press release made by the CEO of MULN, and I just want to show you this really quickly.
Wow, what a beautiful place and beautiful cars. I feel like a kid in a candy store. Good afternoon, and thank you to all the media for being here today. I'm so excited to see you. Understanding how difficult it is to travel during these COVID times, a special thank you for being with us here today and embarking on our very exciting journey. Today is the worldwide introduction of our newest MULN Automotive EV, the MULN 5 crossover. But it's also the world debut of our company as MULN Automotive. I can remember I dreamed of having my own car company. 10 years ago, when I began this journey with MULN, I imagined making the impossible possible. Today, it is a reality. We've graduated from a small startup to a now publicly traded company that
So this company IPO'd in November, and they've just gone out onto the Nasdaq. They're a startup EV company that, for whatever reason, sold off so fantastically. But I'm looking at their website and I'm looking at what they've made, and like it, I think their car actually looks pretty freaking cool. Um, I don't know anything about the specs or anything like that. I don't know how the company's sales have performed. That's all stuff that we still have to continue doing. But at first glance, I don't see anything wrong with this company that would explain the sudden sell off. And this is a new competitor to Tesla, so EV is becoming more and more popular, especially since there's no like real SUV crossovers or anything in that arena as far as EV goes. So I don't see anything wrong at first glance with this company. Just looking at MULN's trading chart one more time on the 4 hour, it doesn't really make sense that they continued selling off after such good news and the release of their vehicle. I'm guessing that this would have been about the time that let's see, November 21. So this must have been pre-IPO price. It had a really good open, and then it's just been selling off ever since, and it's been in this bull channel ever since. And what I find really interesting is this is exactly when the short exempts just took off, and why that is, I don't understand. Because one thing that I want everybody to understand when I show them this chart is that, and understanding short exempts, is that short exempts are to fulfill buy orders. There's no other reason for them to exist. Short exempts must be used to fulfill buy orders because that is bona fide market making. If there is actual market making that going on, then short exempts imply that there's an immense amount of volatility in the stock and there is more and more being traded on the regular. So for that to be the case and for the price to simultaneously not be moving up makes no sense, especially with numbers this huge. The short exempts on MULN are absolutely excessive. And seeing how both the volume and the short exempts just in recent time, ever since February 4th, is really suspicious to me. So I'm going to go over my theory of what may be happening, and please understand this is not financial advice, and I'm not an expert in market mechanics or finance at all. So please take what I say with a grain of salt and understand that I could be completely off base, and you should absolutely do your own research and your own due diligence before proceeding with making any investment decisions. That being said, these numbers fundamentally don't make sense because if a short exempt is to take the other side of a buy order and there is such an immense amount of buying and volatility going on in the stock just in the last couple of trading weeks, then why isn't the price moving up? Why have the shorts moved in so heavily into this stock ever since early February? So if ever since the 1st of February, where, by the way, the total short volume exceeded 70% of the total trading volume and has been averaging above 50% every single day since then, why is the price not moving up? Because of that short volume. My theory is that the price is being suppressed because there is an immense amount of shorting that has been going on, except it may be naked shorting. The number of short exempts here on the books seem bizarrely excessive for a company that was selling off the entire time. Short exempts are not used to take a directional position against a stock. Short exempts are used to fulfill buy orders. And if there was a lot of buying going on that was meant to be suppressed in order to protect a net short position, then if there were any colluding market makers working with a short hedge fund in order to protect them or in order to leverage a directional position, then this might be the explanation why. And if that continues, then whatever is going on with the short exempts illustrate that market makers are dangerously over leveraging themselves. The fact that there are so many short exempts on this stock places market makers in an excessively dangerous position. And here's why. Remember when I said that T plus 6 of failures to deliver on for a market maker is disastrous. It's because if they get restricted in trading the stock and they still have outstanding failures to deliver, they will be forced to close those positions. The number of short exempts here, as I mentioned, exceeds 35% of the total tradable float. As of the last time that I looked at the numbers, 17%. That may have grown since then. Some of my members of the Discord are showing filings that show that that the outstanding shares may be as high as 35 million. However, this is still an excessive number, even with those figures. That would only double. At most the outstanding shares, and that would bring that ratio down to a still insane 12%. 12% short exempt volume if the stock had a $35 million outstanding shares. No matter how you slice it, there is a dangerous amount of over-leveraging happening if these short exempts have not been covered. And if they haven't been covered and the market maker still has outstanding short exempts, then they may fail to deliver. And if they fail to deliver and remain failures to deliver for more than 6 trading days from the time that they were opened and settled, then the market maker will be forced to close them. And they will be forced to close them at whatever the market price is set at. Here is what I think might be able to happen. Currently, the stock is trading at less than 70 cents. At an average trading price of 70 cents, the entire tradable float, if we assume 17 million shares float, is less than $12 million. If you were to take an average investment cost basis of $1,000 a piece, then less than 12,000 investors with 1,000 shares each would be capable of buying up the entire tradable float of 17 million. If we were to more than double the outstanding shares, assuming that the other DD being done in our Discord is correct, that the outstanding shares is actually somewhere in the neighborhood of 35 million, then the total market cap at an average trading price of 70 cents per share would be just under $25 million. For $700, 1,000 shares can be bought at an average trading price of 70 cents. 35 million shares divided by 1,000 shares gives you the average number of investors required to buy up the entire float. So, if 35,000 investors each purchase 1,000 shares for $700 each, on average, they would purchase the entire outstanding shares. That is not a lot of people, and that is not a lot of money. And there are much bigger whales out there. As an example, $70,000 could purchase 100,000 shares. 100,000 shares of a float of 35 million is just under 3%. Excuse me, 0.3%. And to make things more interesting, MULN all of a sudden started getting a lot of attention on Twitter and social media. The sentiment is extremely overwhelmingly bullish, and it's continuously been so for the last several days. There's individuals such as Antonio Costa of AC Investor Blog that's been talking about it with massive follower accounts. And this conversation has been ongoing for the last several trading weeks, with a lot of heavy talk going out just in the last 24 hours. Something is going on with this stock, and I think that there are definitely people who know what that is, but I'm not going to say that I have a clue. The only thing that I can tell you is what the numbers tell me. And what the numbers are telling me is that short exempts are extremely high, meaning that if they are naked short or if they've not been located, then they will become failures to deliver. If they become failures to deliver, then the market maker will be put in a position where they will be forced to cover those failures to deliver, or they will face trading restrictions. That is the penalty for failing to deliver as a market maker. You lose the right to be a market maker. If this goes on, then it's going to put market makers in an extremely dangerous position, and I think that retail is catching wind of it. Whatever is going on with this stock, I can't say certain, but I feel confident in my decision to take a position on this stock. I don't know what's going to happen or when it's going to happen, but I do know that these signs tell me that some kind of a squeeze event may be on the horizon. But as I said, You need to do your own research, your own due diligence, and please, please, please don't make any investments that you cannot afford to lose. Please manage your risk and understand that I'm not a financial advisor and this is not a stock recommendation. Please do your own research and check this out for yourself and make your own decisions. Thank you so much for watching and have a hell of a time in the markets.